Axis Bank is the top Nifty loser, trading with losses of around 5%, even as it reports its fourth quarter numbers above estimates. The bank sees weak business momentum from a year ago. Year-on-year deposit growth is the second lowest that we've seen in the last 16 quarters.
Tech Mahindra comes in for profit-taking after reporting its quarter four numbers. The constant currency revenue declines by 1.5% versus an estimate of around a 0.5% drop from last quarter, while deal wins remain healthy.
SBI Life, on the other hand, is up around 4% in a weak market on results that came in above estimates. The value of new business margin actually rose by over 200 basis points year-on-year.
IEX climbs after posting a mixed quarter. Profit after tax comes in line with estimates, while revenue comes below analyst expectations. In fact, we have the management joining us to discuss the quarter gone by in further detail.
Science slips after the company reports a revenue and margin miss. The company also provided no guidance for the FY26, citing uncertainties in the near term.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel. With me is Mangalam. Well, Mangalam, we start off a new series. The last couple of series were good. But this series, you needed a reason for profit-taking. Yeah. I think for the time being, the street is keeping an eye out on the border. And also, global cues, more or less stable. But I think, you needed a reason to see some profit-taking, and that's what's happening.
That's exactly what's happening. We've rallied around 2,500 points from the lows of April series. There were a fair amount of shorts which are out of the system. A lot of the HNIs also, booking out some of the profits. So maybe one of those reasons why the Nifty has fallen from the highs this morning. But what's interesting is that whether we go ahead and see some sort of recovery towards the end of trade or not, because day one of the series, lows made on day one or highs made on day one of the series, extremely crucial to track for the remainder of this series as well. What we're seeing, however, in the mid-cap end of things is a little more than just, the frontline indices. We have around 2,200 stocks which are in the red for about 200 stocks which are in the green. And a few of these names are seeing a brutal sell-off. SBI Card, for instance, is now lower by about 5.8%. Of course, reported a pain in their numbers as well. ACC is the other one, Adani Green, L&T Tech Services, Berger Paints. The paint sector had done well earlier as well, but now coming in for some profit taking. We have Loris Labs, Oberoi Realty, Z Entertainment, and Angel One as well, lower in today's trading session by anywhere between 3 to 5%. But the stock on our radar, the one that is actually doing a lot better, is IEX. The company reported a mixed quarter in the fourth quarter, mixed performance rather in the fourth quarter, with the revenue coming in below analyst estimates, but profits after tax came in line with estimates. To discuss the quarter gone by, more importantly, the outlook going ahead from a company standpoint, from an industry standpoint, and more importantly, from a regulatory standpoint as well, we have with us Rohit Bajaj, who's the joint managing editor at IEX. Thanks a lot, Rohit, for joining in. The fourth quarter, as it were, if you could give us a sense on the volume target for FY26. Last year, you did volumes of late teens, almost 20%. What's the target that you have for FY26? And if you could break that up across all your verticals?
So this year, before moving to FY26, let's see what we have done this year. In FY25, our electricity volume grew by 19% and certificate volume grew by over 100%. So we have been giving this sort of direction in the previous year also. Last year, this number was 14%. This year, it has improved to 19%. As demand is increasing in the country, as the supply side, we have seen liquidity coming in. There is a lot of coal availability in the country. The prices have stabilized. Gas prices have stabilized. So this is resulting into a little better supply availability, which is giving us some headroom to grow. So we expect that going forward also, what we have achieved this year, this trend can continue.
So 19% is gettable in FY26. Do you have a sense of whether you can better that or not? And if you could give us also an outlook onto power supply volumes and also the certificate volumes for FY26.
So electricity side, we are in the process of launching a couple of new products. So we are in the process of, currently we have contracts up to 3 months. We are extending this. We have filed with the regulator for approval. Once we have that approval in place, we would be extending it to 11 months. Which means there is additional 30-40 billion unit of market potential available for us. So that is over and above what we have, what the guidance we are giving till now. So business as usual basis, we can expect 18-19% growth, which we have been maintaining in the recent past. And on top of it, with the green RTM sort of segment, which is a new product, similarly, the 11 months TAM contract, which is going to be a new product, we can definitely target for a little more. Now, the second aspect is certificates. Certificates, we have seen a lot of correction on the prices side. So this year, when we say we have doubled the volume, in fact, more than doubled the volume, it has because the prices have come down. More and more consumers as well as distribution companies, now they are finding it viable to buy at this particular price point. So this trend is expected to continue. There's a lot of inventory available, and we expect that prices will remain at a sweet spot at this level only, and then the growth momentum can be maintained.
Hi, Mr. Bajaj. Good morning. Good to see you. When the street seems to have liked what you've delivered so far, another crucial matrix that we look at is the market share. Could you tell us in the last 1 year, how has the market share moved? And where do you see this market share headed?
Yeah. So electricity is our major segment, which contributes to little more than 90% of our total. So in this particular segment, last year our market share was 84%. This year also it is 84%. We are maintaining that level of 84%. And I'm sure with the newer segments that we are going to introduce in coming year, and we can have, since we are the one who have filed for approval, we might have first mover advantage there, then probably we would be able to increase this in the next year.
All right. You are likely to increase your market share in the next year. To what? Do you have any target in mind?
So 84% itself is a very good market share, but yes, a couple of points above that is what we are targeting.
Okay. A large part of, your overall growth will also depend on what you do outside of electricity, even though electricity is about 90% of your business. I see a fair amount of profit contribution that has come in from IGX. And also you are speaking about ICX, which is a coal exchange. If you could give us a sense on, the potential that both these businesses hold for you, more in the near term, IGX, because it's a proof of concept already. If you could give us a sense of what kind of volumes you are doing here, what's the kind of, business that you can do over the next few years, and the coal exchange, if you could give us a sense of the business size in the medium term for this one.
So we are very bullish on IGX now because the kind of volume increase we have seen in the last quarter, because prices in the gas side has stabilized and more people are interested in buying that now. In fact, if you have seen the recent headlines, in the crunch period, in fact, government is pushing for operationalization of all the gas-based plants which are there in the country. So this is one area where we expect that demand is going to grow. And with more CNG demand, more PNG demand, this is one thing which we see a lot of growth potential in coming years. So in quarter Q4 alone, we have seen 100% sort of jump in the YOY basis. So we expect that this is one target area for us. We expect very good volume going forward. And ICX is Indian Carbon Exchange, the subsidiary that we created about two years back. In this particular subsidiary, we have started registering, we have started issuance of international RECs, international RECs. So that thing we have started. This is not very high potential segment. Our top line this year is about 3.5 crore, which is going to increase in coming years. But we do not expect it to be anywhere similar to IGX or for that matter, IEX sort of a numbers. So there would be slow growth there. But coal exchange, you mentioned about coal exchange. This is one segment where, again, there is a lot of development which has happened. There very recently in the month of March only, the Ministry of Coal came out with a paper where they are seeking comments for amendment in the Act, Mine and Mineral Development Act, wherein they are paving way for creation of coal exchange. And we are again very bullish on this particular aspect and working very closely with the government and all other agencies. And as the framework will be created, we hope to launch this particular exchange also going forward.
Okay, all right, Mr. Bajaj, everything that you're saying operationally looks good. The biggest overhang on the stock is market coupling. Has there been any progress on that front? Have you heard anything, any direction that you'll have got?
So it's almost 2 years now.
Yes.
When the first order came issued by CRC, and no development as such. There has been no order on that regard, no report on that regard. We have not received any official communication. We are waiting to hear from a regulator on this particular aspect. But
Any timeline you've heard, sir? As you said,
No,
it's been a long while.
No, sir, no timelines given till now. But again, we strongly believe because since the DAM and RTM, majority of the share, almost 99.5% of the share is with us. I'm sure regulator will look into all the aspects, and then they will also see this particular aspect. If everything is with one exchange, what sort of benefit can be accrued from the market coupling? I think those things will be seen while arriving at the final conclusion.
Could you give us a sense of the kind of discussions that you are having with them? Because ever since the first document came out, you said it's been 2 years. So I'm sure there has been a fair amount of conversation that you've had with the regulators. There has been a bit of a back and forth, on, off, whatever, when it comes to the record. If you could give us a sense on what the pros and cons of this are, not necessarily from an IEX standpoint, but from an industry standpoint.
So there are so many things which are in public domain. In fact, when 2 years back it started, after that there was one order given by CRC wherein they mentioned that they did some simulation and the findings were not very, very positive. Still, they referred it to Grid India to do a pilot study, which I think we understand they are doing. So once this study will be done, and then probably we'll get to hear something from the regulator. So as of now, for let's say last 5-6 months, there has not been a single development on this front.
All right. And finally, for the end of this year, because you're speaking about good volume momentum continuing, adding a fair amount of new products as well, then the additional booster coming in from gas, would you have a sense on the kind of margins that you're targeting for the end of this year?
So margins are continuously improving because the cost, if you look at this year also, the top line grew, revenues grew by 19%, and then the cost increase was only 10%. So we expect, and exchange business is like that, the cost is not similar to the revenue growth. So we expect that this trend will continue and we would be in a position to deliver better margins going forward.
How much better?
Difficult to put number to that. But yes, since there are some new product also in the pipeline, so there would be some expenses associated, technology expenses associated with that. So at this point in time, it is difficult to put number to that.
And would the revenue growth be similar to the volume growth, or would it be more?
It should follow the trend that we have seen this year. It is expected to follow the similar trend.
Got that. Thank you so much for joining in and giving us an outlook onto your business for the entire year, and more importantly, the regulatory concerns as well, which you have highlighted and spoken about as well. That's IEX. The street likes the numbers. More importantly, the street likes the commentary. The stock up around 2.5% in an otherwise wobbly, weak market. Take a short break, come back. We focus on the markets itself. Manas Jaiswal joins in for a quick technical check on the way he's looking at the market right now. Stay tuned.
Welcome back. Well, the markets continue to see some kind of selling pressure. Delivery is one stock that's actually moved up in the last few minutes, so just keep an eye out on that particular counter. Manas Jaiswal, though, joins in for a quick technical check. Hi, Manas. Good morning. Good to see you win. The markets have pulled back. Some would say on expected lines after the kind of run that we had. Where do you see support for the Nifty?
Good morning. So I think Nifty can test its 10-day moving average, which is placed near 23,800. Or maybe below that, it can even test 23,600. So if one call I have to take right now, I think it would be a sell call. The stop loss should be around 24,150. That is cash levels. And I think you can see the bigger target of around 23,600 on Nifty.
23,600. So you're looking to sell into any kind of bounce.
Yeah, definitely.
Got that,
yes.
Got that, Manas. What about the Nifty Bank? Because that one almost made it to 56,000. And even in my morning charts, I've been making this point that the next run for the Nifty will come once the Nifty Bank can take out that level. We went to 55,000, 900, 56,000 as well last week, but we couldn't, conquer it earlier this week. I meant, where are the supports coming in for that? Because it's coming in at around 54,400 as we speak, down 700 points.
So I think here you may see some more weakness because looking at the pattern and especially Bank Nifty has broken the key support of 55,000. I think you may see some more correction. It can go down and test 53,500 of almost 1,000 points crack from current level. So here, I think here also you can create short position. The stop loss should be around 55,000 on the upside.
All right. And individual stocks, Manas, what's on your radar today? I mean, are you trading on the long side, looking for shorts, or looking for opportunities that have dropped and, providing an attractive entry opportunity, so to say.
No, since my view is bearish, so I would like to go short in two stocks. First is Container Corporation, where stock has broken its 20-day moving average. So in Container Corporation, one can create short position. Stop loss should be around 700. Target would be around 665. And second is a sell call on Voltas, where stock has given a confirmation of lower tops and lower bottoms. So take a short call here in Voltas also. This is a future price. Keep your stop loss above 1270 and target would be around 1210.
All right, Manas, thank you so much for joining in and giving us your views on the indices as well as individual stocks. With that, we'll get you a few ideas coming in from profit from our colleagues at Money Control Pro. Nitin Agarwal joins in with a stock.
Amid heightened market volatility driven by uncertainty surrounding US President Donald Trump's tariff policy, we are strategically focusing on opportunities within Indian market that have minimal or no exposure to America. This approach helps us mitigate the risk arising from the global trade tension. On the back of this, we have identified a company which is from the auto ancillary space. The name of that company is Bosch Limited. Bosch fortunes are directly linked to the commercial vehicle segment, which has shown a muted growth in FY25 primarily due to the election and less spending by the government. However, the medium to long-term outlook seems promising due to government's focus on thrust on infrastructure construction and mining activity. The management has indicated that the outlook for MNHCV segment is very, very promising. The management is also focusing on localization of the localization of products in order to improve its profit margin. In addition to that, the company has been consistently investing in new technologies and adopting and trying to capture the new segments that are coming up, such as electric vehicle segment. The company has been investing a lot of money out there, and they are expected to get the benefit from that segment as well. Going forward, the company is focusing aggressively on EV segment. In terms of valuation, the stock has corrected more than 30% from its 52-week high, making the valuation very reasonable. It is currently trading at around 30.7 times FY27 projected earnings, which we believe is reasonable for a company like Bosch.
Okay, all right, Nitin, thanks a lot for that. Well, time to slip into a short break, but as we do that, here's some good news for our viewers. India's business leader is now a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates. All of this at your fingertips. Download the CNBC-TV18 app now from the Apple Store or from the Google Play Store, or just scan the code that's up for you on the screen.
Welcome back. There's a wave of profit booking, and it's across sectors. If you look at the top 5 stocks on the Nifty which are hitting the lows of trade today, we have JSW Steel, which is at the low point. We have Tata Consumer, which is at the low point. Remember, the stock had rallied about 6% from lows in yesterday's trading session. Tata Consumer ended in the green, but now seeing some bit of profit booking after having rallied about 14% this month itself. Divi's Lab is the third one, down 3%, currently at the lows of trade. You have HDFC Life, which was actually doing well in, connection with the kind of results that SBI Life had posted, and as a result of which the up move that we saw opened in the green, fairly in the green, and has now corrected about 5% from the highs. And the fourth one we have are both Divi's Labs and Bajaj Auto, both of them at the low point of today's trading session. So it's across the board, no one particular sector. Even in the broader markets, you look at Nippon Life at the low point of trade. We have MCX, which is at the low point of trade, and Interglobe Aviation as well. The stock's seen a fairly good run, but currently at the low point of trade, seeing some profits being shaved off on Interglobe Aviation, currently down about 5%. But the big boy today will be Reliance Industries reporting its fourth quarter earnings. Rima joins in with the key expectations of what the street is working with this time around. Rima.
Steady and strong, that's the way perhaps to describe the expectations from big boy Reliance Industries earnings in the March quarter. Now, on the top line, about a 1% revenue growth, 2.42 lakh crore. Year on year, the revenue growth would look more at 2 to 3%. EBITDA is seen on the flattish side. So 43,800 crore on the EBITDA, which means EBITDA margins of 18.1%, and profits are seen lower slightly, just about 2%. Now let's talk about the individual businesses. So Jio is going to be a growth driver. Jio is going to have another good quarter because the July tariff hike benefits will continue to flow through. Oil and gas is likely to be a bit subdued on account of lower volumes, and even retail is likely to see some sequential softness. So if you remember, Q3 is typically a very strong quarter for retail on account of festive season. So therefore, quarter on quarter, the Reliance retail EBITDA could be down, but year on year, it's still likely to report a growth of about 10 to 11%. And O2C is likely to have a mixed quarter. Cracks are slightly lower, but on account of better sourcing, perhaps the gross refining margins for O2C could be up. Now, the stock hasn't, year to date, it's up close to about 6%, but from its 52-week high, the stock has fallen close to about 20%. But bear in mind that a peer like Bharti Airtel, at least a peer in the telecom business, has outperformed Reliance Industries by 50% in the last 1 year. So investors are saying at some point, at least, there can't be so much disparity between Bharti Airtel and at least the geo valuations of Reliance Industries. But what is dragging Reliance Industries down? One has been the slowdown in retail. So what investors are closely watching is when will the retail recovery come through? What does the company guide about that? Secondly, reduction in their capex intensity, which means more free cash flow. And thirdly, monetization. Is a Jio IPO coming? What do they talk? What do they say about that? What can they guide about potential monetization? These would be a few big things that are top of mind for all investors. That's a standard disclaimer from Reliance Industries from our channel.
All right, Rima, also tell us about the key expectations from Reliance Jio's numbers.
So Reliance Jio is likely to be the growth driver this time around. So on the top line, we're looking at a growth of a little more than 2%, revenue seen at 29,925. And this will be driven by a combination of ARPU increase of 1.5%, and some subscriber ads. Now, ARPU is going to be critical. It's been going up for the last couple of quarters. And remember, in July, the entire industry had taken a price hike. And the benefit of that is still flowing through. So in the current quarter, according to our poll, the ARPU should increase to 206 versus 203. And for Jio, they have a higher percentage of annual recharge customers compared to its peers. So that explains why, even after 3 quarters, they will get that benefit of the tariff hike. Subscriber ads seen at about 5 to 6 million on a sequential basis. Now, margins are seen on the flattish side, 52.8%, and the profit number, according to the CNBC-TV18 poll, should be 6,515. 2 key things to watch. One, the fixed wireless access, where the ARPUs are much higher, basically a 5G, that is seeing pretty robust addition. And secondly, the IPO timelines, because that is the monetization all investors are awaiting. So good numbers expected from Reliance Jio, and that standard disclaimer will come up for you on the screen.
Take that point, Rima. Good numbers expected from Reliance Jio. All eyes on monetization of Jio, value unlocking out there as well. But for now, for the markets, there is profit unlocking or profit booking that is taking place right now. We'll leave you on this edition of Chartbusters, but stay tuned. Trading Hour comes up next.